Hi, I am investing is common sense. I am going to discuss with you about Tenaga Nasional Berhad, especially the failure of Tenaga Nasional Berhad acquiring UK renewable energy assets by paying 13 billion ringgit in cash. Tenaga Nasional Berhad is a monopoly in transmitting and distributing all of the electricity used in Malaysia, serving 33 million Malaysians. Theoretically and practically, Tenaga Nasional Berhad owned by every one of us Malaysians because sovereign wealth funds own around 70% shareholding in Tenaga Nasional Berhad. Sovereign wealth fund is a government-owned investment fund. Who is the boss of government? We Malaysians are the boss of the Malaysian government. As at 31st December 2022, Khazanah Nasional Berhad had 25.5% of shareholdings. Other government-related agencies cumulatively held 43.2%, with Pemadala Nasional Berhad at 18.3%, EPF at 15.8%, Kubulan 1 Pasaraan at 7.3%, and others at 1.8%. It is also the largest power generator with the market share of 66% as at June 2023. Tenaga Nasional Berhad is using fossil fuel sources to generate electricity, predominantly gas and coal. In 2022, coal accounted for 41.8%, followed by gas at 34.4%, hydro at 17.8%, solar, wind and biomass at 4.6%, oil and mini hydro at 1.4%. To avert the worst impacts of climate change and preserve a livable planet, global temperature increase needs to be limited to 1.5 degrees Celsius above pre-industrial levels. Currently, the Earth is already about 1.1 degrees Celsius warmer than it was in the late 1800s, and emissions continue to rise. To keep global warming to no more than 1.5 degrees Celsius, carbon emissions need to be reduced by 45% by 2030 and reach net zero by 2050. What are the consequences of exceeding the target of 1.5 degrees Celsius? Extreme flooding, wildfires, and food shortage, and others. Malaysia is a member of the Global Village and aims to achieve its net zero carbon emissions by 2050 under 12 Malaysia Plan 2021 to 2025. As a corporate citizen, Tenaga Nasional Berhad is growing its renewable energy portfolio in existing as well as adjacent markets across Asia Pacific and Europe. It aims to achieve the overall target of 8,300 megawatts of renewable energy capacity by 2025 and over 14 gigawatts of renewable energy capacity by 2050. In 2017, Tenaga Nasional Berhad ventures into the Europe renewable energy market by acquiring a 50% interest in one of the UK's largest portfolios of operating solar power assets, with a combined capacity of 365 megawatts. The transaction was valued at an enterprise value of £470 million and an equity value of around £86 million. The shareholding increased to 55% by contributing £11 million. In 2018, Tenaga Nasional Berhad acquired other renewable energy assets by purchasing 80% stake in two operational onshore wind portfolios with an equity value of £77.37 million. The shareholding increased to 100% by contributing £18.6 million. In 2021, Tenaga Nasional Berhad has acquired a 49% stake in Bill Offshore Demonstrator Limited, an offshore wind farm company in the UK, with an enterprise value of £119.2 million. If we assume 20% of the transaction was financed by cash, Tenaga Nasional Berhad contributed £23.84 million. The assets include 5 turbines with a total installed capacity of 41.5 megawatts and further development rights for a floating offshore wind project of up to 58.4 megawatts located off the Northumberland coast. In 2022, Tenaga acquired a 97.3 megawatts operating onshore wind portfolio in the UK on 1st April 2022 with an enterprise value of £145.9 million. If we assume 20% of this transaction was financed by cash, the company contributed £29.18 million. The total equity contribution by Tenaga Nasional Berhad amounting to £222.15 million or around 13 billion ringgit at the exchange rate of 5.84 ringgit per pound at 24th October 2023. All these assets are parked under Vantage RE Limited. I don't see any dividend paid by Vantage RE Limited to Tenaga Nasional Berhad in the 5-year period from 2018 to 2022. Can I ask you, Tenaga Nasional Berhad, do you recoup any investment return from the £222.15 million equity investment, or you use the cash flow from operating activities for other purposes, like further expanding the business? Secondly, the investment assets are not performing well using return on invested capital measurement. The 5-year period financial statement from 2018 to 2022 shows that Vantage RE Limited incurred net losses for these financial years owing to high cost of sales and finance costs. On average, cost of sales and finance costs account for 67% and 60% of revenue respectively. Therefore, the company will making losses. For example, in 2018, the company cost of sales and finance costs were £10.93 million and £10.57 million compared with revenue of £14.8 million, resulting in net loss of £8.9 million. If you use the return on invested capital to judge the performance of the investment activities carried out by the company, they are not performing well. I define return on invested capital by dividing operating profit by invested capital. Invested capital is defined as property, plant and equipment plus net working capital. Net working capital is defined as account receivable plus inventories minus account payables. The number range from 0.37% and 4.18%. What is the meaning of 4.18%? It means that the company only earns 4.18% on the investment activities. What is today's fixed deposit rate? Around 3%. Fixed deposit is risk-free. That means the return is guaranteed. Tenaga Nasional Berhad needs to bear the risk like underperformance of the renewable energy assets, such as low electricity outputs due to volatile weather and force majeure events like infrastructure failures. However, in order to have more accurate details on the investment performance generated by the renewable energy assets in the UK, we can use IRR to determine the investment result of each asset. Currently, I do not have the details on each asset, and hence I cannot build the financial models to determine the result. If anyone is from Tenaga Nasional Berhad, I hope you can share with us the electricity output, tariff, operation and maintenance, tax rate, debt to equity ratio, loan tenure, loan repayment, moratorium period, duration of the wrap-up of each investment activity in the UK that you carry out. Therefore, we can have a clear understanding on the investment performance. For my audience understanding, when it comes to due diligence, the process is lengthy. For example, if there is any doubt, you need to ask questions to the counterparty. For each due diligence, I could ask more than 100 questions for clarifications when I was working as a financial analyst. In the following example, you can see that I asked about rental repayment and profit sharing to the state government. The answer was the rental is about 50,000. Also, there is a profit sharing in the amount of 200,000 for first 10 years and 700,000 for the subsequent. We have top up a model for 430,000 and 770,000 due to quick rent fee. You can see red bar which contains tariff, duration of the agreement, install capacity, export capacity, name of the holders. You also need to apply license from Energy Commission with the terms and conditions. The licensees needs to protect the environment, to have the EIA report, to buy the resources at the most economical way. The shareholding structure will be the same in the first 2 years after COD, and any change in shareholding structure requires the approval from the ministry. The terms and conditions of the loans are different for each project. For the following example, there is a principal moratorium period of 1 year, but interest rate has to be paid in the beginning. In the end of the second year, the principal repayment is 10 million for each year until 50 million has to be fully settled. IRR or internal rate of return is indicating the annualized return of an investment project with the expected future cash flow. I am showing you a hypothetical hydropower project with assumptions. CapEx is 350 million ringgit. The electricity output is 160 million a year. Tariff is 0.28 cents per kilowatt. Operation and management is 5.5% of total revenue. Contribution to state government is 5% of total revenue as part of corporate social responsibility, like helping indigenous people to relocate their houses, upskilling them, and forest preservation. Insurance is 0.6% of total capex. Insurance premium declining rate is 5% a year due to wear and tear of capex. Interest rate is 6.5%. Loan tenure is 15 years. Principal and interest repayment moratorium period is 3 years. There is no interest during construction. Tax rate is 24%. Inflation rate is 3% a year. Capital allowance can be used to offset against 100% of statutory income. Mind you, green investment tax allowance can be used to offset against 70% of statutory income. 3 years construction period and 30-70 equity to loan. PPA agreement is 21 years. Depreciation is straight line method with 4.7% depreciation rate a year. If you compare net income with free cash flow in year 1 after COD. Net income is 7.5 million ringgit, but free cash flow is 17.8 million ringgit on the back of capital allowance and depreciation. Depreciation is a non-cash expense, so it does not affect free cash flow. Tax expense is zero because capital allowance is utilized to offset against taxable income in the year 1. However, starting from year 12, the company needs to pay tax to IRB because capital allowance has been fully utilized in the business. Cash is king. Free cash flow is important to the business. Income statement is prepared on an accrual basis. Revenue and expenses are recorded when they are incurred rather than being paid or made. Therefore, free cash flow gives a more complete picture on the company's financial health. Malaysian electricity tariff is made up of two components under incentive-based regulation framework: base tariff and imbalance cost pass-through. IBC was introduced in Malaysia in 2014. Every 3 years, a base rate is determined by the Energy Commission, taking into account variable factors such as the projected price of fuels like coal and gas. The base rate also includes costs relating to operations and maintenance of the electricity supplier, such as overhead costs, customer service costs, as well as expenses incurred for infrastructure development. On top of the base rate, a cost adjustment is also passed through to customers every 6 months in the form of a tariff surcharge or rebate. This mechanism, called imbalance cost pass-through, is operated as part of the IBR framework. Every 6 months, ICPT analyzes the true cost of generating electricity against the initially projected cost. This mechanism aims to deliver a fair and transparent method of setting prices by passing through any cost or savings back to the end consumers. For example, lower fuel prices and generation costs may lead to consumer rebates, while higher generation costs may lead to surcharges. Therefore, Tenaga Nasional Berhad passed through the volatility in fuel and other generation-specific costs to the consumer. It is not subject to pricing risk of commodities from this perspective. Any over or under recovery of this cost will be payable to or reimbursable from the government. Upon approval by the government, the agreed over or under recovery cost will be adjusted in the billing to customers as ICPT rebate or surcharge. What is the example of under recovery cost? During the period of high fuel prices, the cost of power generation is higher, and hence the Tenaga Nasional Berhad will get reimbursement from the government. The government will impose surcharge on the customers. On the other hand, the example of over recovery cost is during the period of low fuel prices. The cost of power generation is lower, and hence the customer can get the rebate. During the high cost of generation, receivables, deposits, and prepayments, which contain amounts due from the government under the ICPT mechanism, is higher because the Tenaga Nasional Berhad can claw back the under recovery cost every 6 months. What is happening if the company has high receivable? The company needs cash to run the business, and hence Tenaga Nasional Berhad needs to borrow short-term loan. Therefore, you can see there is a correlation between coal prices and receivables, deposit and prepayments, coal prices and short-term debts, receivable deposits and prepayments and short-term debts. For example, the coal price increased from $181 per metric ton in fourth quarter 2021 to $351 per metric ton in fourth quarter 2022. The short-term debts rose from 6.99 billion ringgit to 13.26 billion ringgit, and receivable deposits and prepayments increased from 10.55 billion ringgit to 22.83 billion ringgit during the same period. However, please bear in mind that correlation is not a causation. Let's say you wash a car, after that it rains. It does not mean that washing car will cause raining. Or after raining, your back pants. It does not mean that raining will cause your back pants. If you want to know causation, please learn regression from me in my investing course. For your knowledge, Malaysia household electricity tariff is among the cheapest in Southeast Asia. In first half 2023, Malaysian government subsidized electricity for the amount of 10.4 billion ringgit and has allocated 5.2 billion ringgit for the next cycle of ICPT from July 2023 to December 2023. The data from global petrol prices shows that on 1st March 2023, Malaysian household tariff is the cheapest in this region at $0.046 per megawatt, Vietnam at $0.076 per gigawatt, Indonesia at $0.091 per kilowatt, Philippines at $0.192 per kilowatt, Singapore at $0.229 per kilowatt, compared to a business tariff for Indonesia at $0.07 per kilowatt, Vietnam at $0.072 per kilowatt, Malaysia at $0.128 per kilowatt, Philippines at $0.148 per kilowatt, Singapore at $0.316 per kilowatt. Tenaga Nasional Berhad revenue and net income increased from 15.39 billion ringgit and 3.7 billion ringgit in 2018 to 73.18 billion ringgit and 3.56 billion ringgit in 2022. However, net margin dropped from 7.43% to 4.6% during the same period. Over the years, the company return on equity is not performing well, ranging from 5.92% and 8.73%. The company total liabilities to total asset ratio increased from 0.6 to 0.7 during the same period. Is this a dangerous sign? In my humble opinion, Tenaga Nasional Berhad is a monopoly that can distribute electricity to consumers, and the company incurs recurring cash flow from the consumers as electricity is an essential item to the people. Everyone needs electricity for survival. On average, the company generated around 14 billion ringgit cash flows from operating activities, while financing cost on borrowing is around 2.4 billion ringgit a year. The total debts increased from 47 billion ringgit in 2018 to 64 billion ringgit in 2022, while borrowings cost increased from 1.938 billion ringgit to 2.693 billion ringgit, which represented an average interest rate of around 5.34%. In the worst case scenario, the company is still able to repay the total borrowing cost with its self-generated cash flow from operations with the amount of 9.378 billion ringgit in 2022. The dividend was declining in line with lower diluted EPS. The company payout ratio ranged from 63% and 127% from 2018 to 2022, which is conflicted with the dividend policy of a 30% to 60% payout ratio based on Patami. However, in the presentation to investors, dividend payout ratio ranged from 49.4% and 58.5%. Reason being is adjusted Patami in the presentation to investors, excluding extraordinary non-recurring items which were not listed in the slide. I don't know how it classifies extraordinary non-recurring items, but some examples of them are impairment losses on intangible assets, gain or loss on disposal of subsidiaries, reversal of impairment losses on financial guarantees. Moving forward, the Tenaga Nasional Berhad has focused on the early retirement of coal plants, the repowering of plants with cleaner fuel and green technology, and forging strategic technology partnership. First, to update and upgrade the Sungai Perak hydroelectric scheme with a capacity of 650 megawatts. The refurbishment works will commence in 2024 and COD are expected to start in 2025. Second, 300 megawatts Negeri hydroelectric power plant, which is scheduled for commercial operation in 2027. Third, large-scale solar 4 project at TNB Bukit Selambau 2, which will add 50 megawatts of RE capacity. Fourth, plans to invest 6.3 billion in the rebuild of TNB retired Sultan Ismail power station in Bakar, Terengganu, using high-efficient combined cycle gas turbine by 2029 towards cleaner energy production. Fifth, feasibility study of a 2.1 gigawatts combined cycle power plant in Kapar, which is slated for a commercial operation date by 2031. Sixth, harnessing 2,500 megawatts through innovative hybrid hydro-floating solar technology, complemented by an additional 500 megawatts from 5 distinct LSSP, each boosting a capacity of 100 megawatts. If anyone is interested in learning stock analysis, please contact me by my email. My email address is in the description. I passed CFA program in 2 years and achieved a distinction for my master's degree in finance, investment, and risk from University of Kent. In conclusion, please don't get me wrong. I am not saying renewable energy assets are not important. I am just wondering why Tenaga Nasional Berhad is spending our taxpayer money to buy low-performing renewable energy assets and helping them in the UK.